Welcome back to my 25K Funding Talent Challenge. This is my journey. What's good, everybody? It's your boy Marcelino back with another video. Today we are on episode 18 and I got that correct. I definitely got that one correct, guys. So today was a really good day. Woke up feeling good. I was actually quite tired today. I didn't even hear my alarm. So I woke up at about, I think, 5:30, 6 o'clock instead of 4:30. I was very tired for some reason. However, it's perfectly fine. Still got done, still got everything done, meditated, told myself I'm a brilliant trader, all of those things. And then I printed out my updated version of my trading plan. So obviously I'm reading my trading plan, reading my trading commandments and all of those type of things. And it's really a brilliant thing to actually have typed out, written down, to be able to read before each session. So I read that, I'm reminded as to my why about trading, going to the charts. I notice what's going on, I see the bearishness, and yeah, you guys will see the trades that I took in London, or the one trade that I took in London and then the trades that I took in New York. Quite hacked about what happened in New York session, in all honesty. I'm very hacked as to what happened in New York session. So I've noticed in New York that obviously stops are quite wider, and there's a tendency where price usually pulls back for a bit and then goes up. However, when you're looking at it on the 15-minute time frame or on the 30-minute time frame, you can see candles just moving. So I figured, okay, this is the plan for New York, and I'm telling you guys my plan. Enter on the close of either a 15-minute or 30-minute, but it has to correspond, it has to correlate. The 15-minute and the 30-minute has to correspond. Stops go below the previous, or below the entry candle that you're entering on. Stops goes below that low or below that high, so below the wick of that candle, and then you just ride it up to your potential take profit target. Okay, that's gonna be the plan. I showed you guys the example that happened to me today. You guys will see it in a minute. So yeah, guys, I wanted to mention I might not be making a video tomorrow for this Funding Talent Challenge, because it's my late great father's birthday tomorrow. So I'm going to be taking my mother and my sister out for lunch supper. I don't know what you call it. I know you call lunch and breakfast like brunch, but I don't know what you call that. So I might not even trade tomorrow, depending on how I feel. Obviously there's a lot of emotions coming into play, because it's the first time being without my father for on his birthday. So that's what's happening tomorrow. So yeah, guys, I just wanted to mention it to you guys. But anyway, let's get into the charts. So let's get into the charts, guys. Let's get into the charts. Actually, before we get into the charts, I want to show you guys something. So this is the second trade that I took today, right? And that was the result of it. I'm going to explain it now. That was the result of it. Then I entered again before I went into the shower. And when I went into the shower, I put my stops at break even, but that was in and around 0.5%, because I didn't want to take another hour, right? Check this. This was like a couple of minutes ago, probably about, I don't know, an hour ago, when I entered the second entry. And check this. Check it out, man. Bruh. Now I was looking at, just for safety purposes, as you can see, 150,400 being my TP, but this is wild, bro. Like, we came, when I was in the shower, we got taken out here, right? Then we went to 1%, came back to break even. But the point is that after making this 15-minute candle right here, after making this, we didn't go below that low again, and we just flew up. Let me show you guys what the 30-minute candle, we're going to go through the charts now. But I want you guys to see what, let me just do this. Why is this thing not working, man? There we go. Why did I enter this thing? So you can see that we have a key level here, right?
the 4H broke above this key level. So I'm just anticipating that the next 4H is going to go up. So we came down, broke below. We got these candles here, right? So my first entry was quite a bummer. It was based off from the 15-minute break in this key area right here. Actually, it wasn't breaking. It was based on this. So this was my theory, right? This was my theory going into this trade. This is the first entry. So this is what you're looking at right here. So the first entry was price pushing. Price has this momentum into this key level, right? Now, when you think about momentum at certain times, you think price is probably going to continue with London Open, with New York Open. There's a lot of momentum. So if you can find the place where price is going to go to, if you find where price wants to move to, then you can more likely find a entry in that direction with momentum, thus being able to enter with a breakout trade, right? So this 15-minute, you can see it was 14.15, right? So that means the 30-minute hasn't closed yet. So we get this candle, and I'm thinking, okay, once we create this low and we break above here, we're probably going to continue. Now, the thought process was correct. However, we came back down, and I should have waited a bit longer. So this is where I placed my buy stop. I placed my buy stop right here above the previous 15-minute high. We tagged me in, took me out at 0.5%, and then continued. Now, if I just waited for this pullback, the real pullback to happen, and then place my buy stops here with my entry below, then we would have been in profit all the way up, right? That's the first trade. The second trade comes. So this is a re-entry, but this re-entry wasn't like yesterday when I spoke about that AUD trade, which was or the other day when I took 2 trades on GBP JPY in the morning. It wasn't impulse. I walked away from the chart after that, and I said, okay, I'm gonna wait for the 30-minute close, which was 10 minutes later. Reasonable. I went to go catch some fresh air, came back with a fresh mind, and I knew what my plan was. Once the 30-minute kind of broke above this key level right here, these bodies and wicks and things, I knew that we're going to be aiming for this. Firstly could be our first TP, and then that could be our second TP, 150,900, and then 150,450 being our first TP, right? So for safety purposes, I was just targeting 400. And so I get in, and obviously because I lost like 10 minutes previous to that, or 10 minutes before that, in my mind, like subconsciously, I want to get to break even as soon as possible. And that kind of fucked around with the trade, because if I just let the trade run, and then nothing would have happened, you know what I mean? So yeah, man, it happens. It happens, and then you can see that price eventually actually hit out TP, which is quite sad, because that would have taken me to 370. It would have taken me above 2%, which would have been a good place to be. But however, I'm still well on my way to being in between $700 to $1,000 up for this week. I'm up at about 291, and that was based on this morning's trade. So you can see the plan here was simply put, we had bearish momentum to the downside. I can see that price has created a level in the market right here. Let me show you guys. Price has created a level in the market right here, and then also this level right here on the 30-minute, and we broke both of those levels with strong momentum. Okay, and then we had this pullback of the wick, and as you can see on the 1 minute, this is a clean pullback into the, so this is a 1H key level, 1H and 30-minute key level, to kind of just retest that level on the 1 minute time frame. And then from there, I'm placing my stops above the anticipated wick, my buy stops at this close. Why do I put it at the close and not at the low? Because at the low, I didn't really like the stop loss size, but then at the close, that's just for me knowing when price is going to flip bearish, and more likely when price is going to flip bearish after pushing up, creating the wick, you can then anticipate price to move down. This being my first TP, and then this being my second TP, or my final TP. Okay, so then we go down, and you can see that I closed out at about 3%. Now what I did see was I closed out half of my trade at 1-to-1 just because I wanted to secure something in the market. However, my TP would have been significantly higher if I just let it run at full. So that's what I'm going to try to do for the next couple of days, for Thursday and Friday, because if I do let it run, this would have been a $375 trade, and it would have put me significantly higher on my balance compared to where I am right now. And then also what I want to do in New York, when I am trading in New York, I want to start possibly taking a lower trade. Instead of moving my stops to half, just leave my stop loss where it is in a safe position, because I see in New York things like this happens a lot. Like if I just took the trade and I left my stops below the key level instead of moving to half, I would have survived that trade. And then even with the second entry, if I left my stops at where the stops is and then just let it run, I would have been able to get my profit. Okay, so in New York, I'm going to drop my lot size to half of whatever I'm risking, and then we'll see that. Also, because New York, guys, you need to understand that New York, the moves is a bit bigger in terms of pips. I don't know why. That's because I think London is moving slow from coming or from Asia. So you can find a 5 to 7 pip stop loss, even 4 pips, sometimes 3 pips. You can find those smaller stop losses because you find in your stop loss placement on the 1 minute, right? After the wick is created. However, in New York, because the London move has already happened and a lot of momentum has already been in the market, and you're anticipating more momentum to come in, what you can start to anticipate is for price to continue. Now, what is the safest conservative entry on this specific pair today? The safest entry and stop loss placement would have been on this 30-minute, waiting for it to break above, and then having your stop below the entry, the low of that candle, and then your first TP would have been there at 1 to 2.8, and then your second one, you can either go for these highs, so 1 to 3, or you can go for 1 to 2 depending on, and the 1 to 2 would have been achieved. But do you see how big these stop loss, like how big the stop loss is in terms of pips, and like the small risk to reward ratio is? Now I'm not in the market to be like looking for super moves or anything. I just don't want to be doing stupid things with having like big stop losses and things like that, you know what I mean? So ultimately we need safe stop losses to make money, because we're in this game to make money. I'm not in this game to look for 50,000 R or 50 R a trade. Because ultimately what's going to happen is when I get a 400,000 account or 300,000 account and I get a 1 to 3, I'm looking at $12,000 now. What's going to happen at $12,000? I'm not going to be looking for any more. I'm not going to be looking for that 1 to 5, 1 to 10. Fuck that bullshit. I'm going to be taking that profit, you know what I mean? So yeah, guys, like, and you can see, like, more likely than not, when you have the direction of the market, it's easier to determine where you should be trading in. So yeah, guys, in New York, I'm gonna be dropping my risk and then just taking the trade in the direction of the market, probably using the 15-minute time frame as my entry, and then my stop loss placement too, because I do see that you could have used this right here. But the problem would have then been is if the next 30-minute candle comes down to create that wick, are you safe? But then at the same time, your stop loss is below the key level. If you had something like this, you would have had a way better opportunity to get like a 1 to 3 or 1 to 5, you know what I mean? Because you have a 10 pip stop loss below the previous week on the 15-minute. So let's look at funding talent. So you know that we had this loss in New York, which was a bit of a problem. So we would have been up about 1.5%. We're up 1.2% now, which is perfectly fine. Looking at the equity curve, we are moving up. I am hoping that I can finish this challenge. If I can finish this challenge, that will be brilliant. Simply just means that I need to make 1% tomorrow, 1% the next day, anywhere in between 1 to 2%. If I, as I mentioned, if I can be anywhere in between 750 to 1000 by the end of this week. So my balance being, right now my balance is, where do they show you your balance here? Current balance 25. Current balance is so current balance is 25291, right? Current equity is 25291. So if this balance can be 25750 to 2600, that means next week I can start risking 1%, especially in London, and then 0.5% in New York. And then we'll be looking at finishing it off before this date right here. But if not, we just get in a retry and we can move with this momentum into the retry, because now I can start to see that my mental, the mental aspect of things is starting to step up, and we're starting to, like, the second half of this month was really brilliant compared to the first half, and I'm just glad that we didn't have to make up losses, but we continuously just moving up. So yeah guys, don't forget to like, don't forget to subscribe, don't forget to comment down below exactly what you guys are thinking, how you going about this process of actually getting funded, and what is the process about for you. Like what growth did you undergo through this process of getting funded, guys, or even of doing the challenge? Because not everybody gets funded, but everybody starts to do the challenge. So comment down below. From your boy Marcelino, have a wonderful evening further, have a wonderful day further. Peace out, man.